Hey everyone, Andy Moss here with tradingadventures.com, and we've got another week in the books. We're closing in on the end of the month of August. One more trading day to go, and then we will open the door on September. We're going to take a step back, look at the bigger picture of the market like we do every week. What is the overall message of the market? What is going on? What is the backdrop and the bigger trends behind the day-to-day action we see every day? So we'll jump right in here with the S&P 500 and notice first of all that it's a slightly positive week relative to last week. Rather than closing on the rising 4-week moving average, we are just under it this week as it continued higher and price stayed largely the same. Like I said, a little positive. RSI is still at 64, nice and healthy there. We're still above the VWAP from the July 27th weekly low and still above the rising 10-week moving average. 40-week moving average is way down here, as is the VWAP off of the March 23rd low. And so this is still a solid uptrend. Last week we talked about selling did not mean damage, and this chart is not damaged. It's consolidating this breakout from a few weeks ago. It's staying largely in place, drifting slightly lower, testing the moving averages and the anchored VWAPs, and there's nothing damaging here yet on this time frame. While we're talking about time frames, let's go ahead and look at the roadmap chart, I like to call it. This is the stock index futures on a 1-hour time frame, and the blue line is the main area of focus here. This is the 5-day moving average, and we still have a series of higher highs and higher lows above a rising 5-day moving average. It hasn't been that way very long, just in the last few days, but for now, that is the situation on the S&P and the NASDAQ. The Russell, however, really struggled today, and it got temporarily above the 5-day, which started to flatten out, but really some big selling here. And what we see, these big bars are the Kevin Warsh comments after the Federal Reserve's Jackson Hole Summit, whatever they do out there. The news initially was very well received, and this is on this shorter time frame. This is something that's slightly concerning. We gave a large move up and then gave back all of that move plus some. Like I said, we're still above rising 5-day moving averages, but these higher lows are in jeopardy here of being breached to the downside. If that happens, then we would likely be back below the 5-day moving average and kind of reset the clock for long setups and that kind of thing. So that's why we want to look at the multiple time frames and really see what's going on from several different points of view. So back to the weekly charts, moving on to the NASDAQ 100, QQQ is the symbol, and it's testing this declining 10-week moving average, also below the rising 4-week moving average, and it never made new highs like the S&P did. Not yet, anyway. It was pretty close, but it's consolidating here. This is the big weekly move that we saw after the July 27 weekly low. It's still above the VWAP anchored from that low. And so once again, it's not damaged, but it's not quite as strong as the S&P. So that's just the situation we see. If you look more deeply, which we'll do later, into some of those sectors, the semiconductors and so forth, those are some things that will give us some more insight into the technology-heavy NASDAQ 100. Moving on to the Dow Jones Industrial Index, much like the S&P, hugging this rising 4-week moving average from the underside, holding the VWAP off the July 27 low, and still above a rising 10-week moving average. And once again, this is not a damaged chart. This is a chart that is working off this breakout move in a sideways or slightly lower consolidation pattern. RSI still well up in the bullish range. 67.37 is the reading there on the week. And so no major concerns on the big picture view of those three major indices. Now we go over and look at the small caps, however, and if you think about behind the scenes, and this is not on the chart, this is not a macro or fundamental view of things, but just adding some common sense in here. If the concern is that the Federal Reserve is going to get more hawkish and raise rates, small cap stocks generally are the first to feel that squeeze because they borrow a lot of money to grow their companies, and the cost of that money gets more expensive. And so way too early. I probably shouldn't even bring that up because this is just a very slight move here. Still within this breakout candle back on end of July, 1st of March, or August, excuse me. But back to the price action, we are below the shorter and medium term moving averages, 4 and 10 week. We did close below the VWAP off of this low, and so a bit weaker there, just like we saw on the the 1 hour time frame, the roadmap chart that's showing up here on the weekly chart as well. So perhaps a little more of a cautionary tale on the small caps. At least that's the way it looks at the end of this week. Sliding on over to Bitcoin, this is still well above that 65,500 mark we watched for weeks and weeks, and it's really holding up pretty well here. It hasn't gotten and stayed above this VWAP from the all-time highs yet, but it's staying very close to that level, testing this level of previous support, which then turned resistance, and now it's acting as resistance again so far. And so the next test for Bitcoin continues to be roughly 80,000. Call it maybe 80,400. That's where we'd like to see a weekly candle get and close. And then perhaps price could continue on up into these higher prices or these higher areas. That's what we see on Bitcoin so far. The dollar hanging on for dear life, not going up, not going down, just really sticking very close to this anchor off the highs back in January of last year, and this gray shaded or light blue shaded area, which has been a factor for quite a long time now. So dollar, Bitcoin, volatility, still very slow or very low and sleepy. Despite some shakeups on the smaller time frames, the big picture volatility remains very quiet. Jumping around to the rest of the world, similar to the U.S. stocks as represented by the S&P 500, and the other indices we look at, it's holding up, hanging out right here, just on the underside of this rising 4-week moving average. No damage there. China, not as strong, but consolidating this move very well, hanging out above this 34.79 level, which coincides with the VWAP from this little pop back here. And this the declining 40-week moving average is a little overhead, but you can see prices from a distance respected it pretty well so far and not able to get above that. So if China is going to make continued progress, it really needs to get over, let's call it 36.55, 36.60 to have a shot at testing these recent highs and getting above that moving average and back on the path to higher prices. The bond market continues to be watched heavily. AGG going nowhere. It's between the declining short and medium term moving averages. TLT, similar picture, a little bit of a bigger green candle here on the week, but it's really stuck here between these moving averages, even though the 4-week has turned up slightly. Let's take a look at yields for the other side of that equation, and they're really holding on to this big breakout, and by big, I mean a long time in the process. Not so much big by movement so far, but it's staying above that breakout level, which leads us to believe that the higher probability outcome is more rising yields. That on the 30-year Treasury, the 10-year Treasury is likewise holding up pretty well after this big rise from end of June to the end of July. It's consolidating that well and hanging out there. So high yield bonds, nothing to see here. Continues to stay very flat in very small ranges. And now let's take a look at oil. Oil back and forth on what seems like opposing and alternating headlines out of the Middle East. It is what it is. Energy is tricky. It's vacillating back and forth on either side of the VWAP from here. And just for curiosity, I haven't done this yet. Let's put an anchor from this high. And by the way, I tend to focus, even though this weekly candle was higher by the absolute high, I tend to focus on whichever candle closed at the higher level or lower level. So just a point of information there. And we can see that oil's kind of bouncing around between those two anchored VWAPs. Maybe it matters. Maybe it's just another line on a chart, but it's a level of interest anyway. And if oil is going to move higher, it probably needs to get and stay above around 89.30. which is close to this anchor VWAP and the closing high of this week a few weeks ago. On the other hand, if it were to get down here and take out these levels, then let's call that the close of this week was 78, which would have it below the rising 40-week moving average. Then that would lead us to believe that the more likely outcome would be lower oil prices in the future. Neither of those things has happened yet, but that's a couple of things you can watch for. Gold. We watched this area of potential support become actual support. Gold had a big rise over the last 6 weeks, and here on the 7th week, it's given some back. Now it's come back down. It's testing that rising 4-week moving average. The 40-week is in there, and this VWAP off of the all-time highs is right there as well. So what we want to see now is, does that become a support level? It looks like it may be so far as the prices close there, but next week will give us more information about whether this resounding up move in gold is for real, or whether this area is the end of the line and it comes back down, perhaps to test potential support back here just below 4,000. Silver looks pretty much the same. And now we'll go into our relative strength measures for another kind of behind the scenes or beneath the surface look at the cross currents in the market. Growth versus value, moving back towards the direction of value this week. And here's the IWD on its own merit, climbing the rising 4-week very steadily, although it's kind of stuck in range here the last few weeks. Here's the growth portion of the Russell 1000, and it's a little choppy to down. So you can see the difference in the individual charts as well as the comparison chart here. Consumer discretionary versus consumer staples, not moving anywhere really much this week. It's stuck between the moving averages, and since it did it on the other ones, here is consumer discretionary. It got this breakout about a month ago, and it's holding the upper side of this trend line so far. So that tells us that buying power, while it has diminished some, it has not been completely overtaken by selling power yet, and it's holding this breakout pretty well within this consolidation pattern so far. On the other hand, consumer staples, even though the price is more erratic here, it's still climbing in an uptrend as well. So both names, and that's an important thing to remember about the relative strength chart. They're comparing two symbols to each other, and if both are going up, it doesn't mean that one's incredibly strong and one's incredibly weak. And this is a good demonstration of that. We've got two charts that are in uptrends, and one possibly outpacing the other slightly. In this case, the consumer discretionary, but not so much that it's taking this to all new levels. So the point is, there's not a huge imbalance in there. Price has gone, basically nowhere for many weeks. And if you look at the RSI of this chart, you can see that reflected there as well. It's just hugging that 50% level very closely. So overall, not a big signal there from that relative strength chart. High beta versus low volatility, more of the same, which tells us if we look at these charts individually, they're probably moving pretty similarly to each other. So let's just do that. SPHB, there it is by itself. SPLV, they look pretty close. Not exact, but pretty close. So no big moves, no big signals, bearish or bullish, risk on or risk off from those relative strength charts. And now we can look at some individual sectors. Here are the semiconductors. And this is, they just can't get a continual upward movement here. We had NVIDIA earnings this week. It started off very strong and kind of fell on its face today. So this move higher looked like a good breakout earlier in the week or right after the earnings report, and it came back to settle in here, and NVIDIA keeps doing what it's been doing. It's not really doing anything. So as a major component in the semiconductor index, you can see it's holding up here a little bit, but many of the other names must be a little weaker to drag this on down. XBI, after just a tremendous move out of this long consolidation, big breakout, a little bit deeper of a pullback into the rising 10-week moving average, and then another breakout. And so now it's consolidating this again. That's not a damaged chart. That is a normal consolidation after a really nice movement higher. So still above all the moving averages, and everything looks fine there on the biotechs, just taking a little bit of a rest here. Software. Really phenomenal strength out of software, a sector that looked left for dead for quite a long time and led largely by Microsoft. And then this week we had other names like CRM, for instance. Those are a couple that come to mind. So software is continuing higher. Another very strong green candle this week and back up into the level of this little peak from back in December of last year. And so after 4 weeks, this week was a little bit of a down week, but a very small consolidation. So, but really after 5 weeks of solid rising prices, wouldn't be surprising to see a little bit of consolidation here in the software sector. Maybe that happens, maybe it doesn't. That's not a prediction. We're just looking at the action on the chart and assessing what might be the more likely outcome. And so next week we'll find out, is 110 to 110.50 resistance on the EV, the software sector, or perhaps does it blow right through it and go on to test these highs from back in earlier 2025? Mag 7 as a group continues to hold up pretty well. We had a breakout move. We had a consolidation for 2 weeks. Now we're right back to those levels. And this looks like it wants to go on up and test recent highs back in May of this year. Financial stocks hanging out very near the highs. I don't think this is not another closing high, but just continuing to ride this rising 4-week moving average very smoothly. Energy, despite the erratic action in oil, energy is holding up very well and inside weak here on this red candle, but once again, above the steeply rising 4-week moving average and still hanging out very near these highs of back in March. So that's what we have on the overall sectors. And so now let's go into the Mag 7 individually. We saw Apple with a big move. A consolidation gave back about half of that move. It held pretty tight for a few weeks, and now we've got a resumption of that move higher. That we closed, this weekly candle closed higher than the highs of early June. And to put this into demonstration, that gives us the big picture here. Now we go into Apple on a daily chart. And what do we see? It hugged the moving averages. Here's the 10, the 20, and the 50 all here very close together. The Bollinger Bands were getting very tight as this consolidation took shape. And today we get a breakout move. It gave back a little bit of that move towards the end of the day, but it held daily VWAP. This is the 30-minute chart. And so now if I'm looking at Apple and either I'm managing an open position or I want to consider opening a long position, what I would want to see next week is maybe a little more consolidation on the upper side of this gray shaded area as the shorter term moving average. So here's the blue line, that's the 5-day moving average. And so if Apple kind of chopped around in this area for a few days, maybe into the middle of the week, while the rising 5-day moving average caught up and it showed its ability, it proved its ability to hold above this area of previous resistance, then that would make me feel better about stalking a setup, a low risk entry into a long position in Apple. So I'm not suggesting that. I'm just trying to put the pieces together here of how we work from the larger time frames down to the smaller time frames. This gives us the overall big picture, shows us the stock is trending higher. It's coming out of a consolidation period. Then we can zoom in and see, okay, what does it really look like on the shorter time frames? And that gives us a tighter ability, a closer ability to fine-tune our entries and find the levels in which we want to protect risk and set our stops. So that's the multiple time frames there together. Amazon holding above this extension level that dates way back. I don't even have the beginning of it on this chart, but it's something we've looked at many times. Big weekly move here, consolidation. Touched this extension level, looks like exactly, and came back up to close slightly above the 4-week moving average, which is down just a little bit, which is very easy to see. Here's the last 4 weeks of action. Price is lower this week than it was 4 weeks ago. So that means that moving average is going to start coming down. But Amazon holding up pretty well there. And if it can get some confirmation and follow through next week, it looks like it might like to go back and make a new high. Google, still doing nothing. We've been watching this consolidation for quite a while. We thought we had a breakout back here. It didn't hold up by the end of the week. And so now we're back into the middle range here and have no resolution as the moving averages pinch it from the upward side and the downward side. Meta had some good news and was the focus for some this week. I guess they paid a settlement. I don't know exactly what they did, but it's a nice move. But look at this. It's inside of last week's big sell-off candle, and it's still below the moving averages. So is that bullish news on Meta? Maybe it was, but it sure didn't have an effect big enough to change the big picture of the chart. Microsoft, on the other hand, 2 weeks of a slight rest and then right back at it. And that's one of the things we noticed in the IGV, the software sector. Part of what's propelling it higher is this just really incredible resumption of strength in Microsoft after its chart looked pretty miserable for quite a long time. NVIDIA, we already looked at. Tesla continues to scrap and claw its way back up, but it's stuck between the moving averages. Once again, we've got the 10-week coming down right here. We've got the 4-week rising right here, and price is just below the center of both of those numbers. RSI couldn't get above 50 and stay there, so it's a nice move for Tesla over the last 4 or 5 weeks, but it hasn't changed the overall picture, which is a choppy mess in here between 345 and 488. So on the weekly chart, that looks like a choppy range, right? But we're talking about a move of over 100 points. Call it 490 to 315. I mean, you're looking at 185 points in there, 195 points, something like that. And that's a big move. So if you zoom into the smaller time frames, I don't focus on buying things that are going down or below their moving averages. As a swing trader, I want to be aligned with the trend. But 298 to 360, if you were lucky enough or precise enough to catch the entirety of that move, there are some big trading ranges in there. So again, just a demonstration of how I utilize these multiple time frames. So now we'll circle back around and look at breadth and participation. And by these measures, they look okay. It's not running away, not pulling back sharply. This is the percentage of S&P 500 stocks above a 50-day moving average. It's coming back in a little bit. It's still in that bullish upper half. And this is the percentage of S&P 500 stocks above a 200-day moving average. Still very strong here at 69.5%. A drag over the point and figure chart. No big change or signal here. We had the big move up. It reversed back down into O's. It's sitting around 61.40. So it's holding up okay, but commensurate with the slight pullback in the markets there, it's coming back in a little bit, but not at a drastic level, right there in the middle. NASDAQ, as we talked about, it's had a wider range, but it too is holding out here close to the middle. It's about 59.5 on the calculation there. And then finally, the NYSE as a whole, similar. So no big alarm bells or anything tremendously bullish or bearish there from the bullish percents indices. So that is the look at the big picture, the weekly charts for this week ending Friday, August 28th. And so one more time in closing here, just to remember the purpose of these weekly charts is to step back from the day-to-day noise and understand the bigger picture and the overall backdrop of the markets. What are the larger trends telling us? What is trending higher? What is trending lower? What's stuck in a range? What is that overall message of the market? We still have to evaluate and manage individual trades and setups on their own merits, but it's useful to understand the environment in which we're operating. If it's a very bullish backdrop and things are trending upward as they are now, then that's good information. If it's a very bearish market and things are trending lower, then that can be useful information as well. And if you're a swing trader like me, you want to carry that information down to the daily chart, down to the 30-minute chart, and ultimately even a shorter time frame. That's what I do anyway, maybe a 2-minute chart or a 5-minute chart, and that's where you really fine-tune your executions, your entries and exits, and look at the intraday action of the stock or the vehicle that you're trading. And that's how we're trying to put all the pieces together. So thank you for watching. I hope you find this useful. If you want more charts, more commentary, more daily trades and ideas and setups, come check us out at Alpha Trends. We put out many videos a day, Brian and I, a tremendous amount of educational support and content to help you put the pieces together and execute your trades well and manage your risk. So you can check that out at alphatrends.net, and have a great weekend.